Ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Massar and Matt Miller. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and those folks streaming on YouTube. Massar, not a whole lot rallying here on the day in the equity markets. There's a lot of activity going on, of course, in the bond markets, but you put it all together here, and this is a market still looking for direction.
Yeah, I'm calling it a meh kind of day, but yeah, look into it's a technical. But Matt and I were just talking about looking at some of the major industry groups in the S&P Communication Services, which we've already decided, right? We've all talked about it's a bad name for the group, but it's a lot of your streaming companies. You've got a Disney that's up about 2.6%, Matt, ahead of earnings this week.
Yeah, Disney is doing very well, and so are all of the streamers, right? Warner Brothers, I think, is up almost 5% right now, and you see a bunch of the other streaming services up 2, 3, 4%. So that's an area that's doing incredibly well as the telecoms. They flipped up and they were down earlier.
Yeah, but of course, it all comes down to the banks. We were just talking with Sarah Ketterer about how most of her clients are still worried about banking contagion. You look at the best performers, Zions, East West, Wells Fargo, but there are still a lot of banks under pressure, and KRE is down for the 5th time in 6 days.
It was interesting. We did get that senior loan officers survey a little bit earlier here. Certainly not the worst case scenario that people had been pricing in. We're going to get a financial stability report out of the Fed a little bit later today. I guess the big question is that if we're not sort of falling off the cliff, that doesn't necessarily mean things are healthy. And I think that's what the market has to parse here as we get the closing bells here in New York. Let's run through them real quickly before we get to some of the other breaking news. The Dow Jones Industrial Average going to finish the day lower by about 0.2% as we wait for these numbers to settle. Looks like the S&P 500 is going to hold on to a modest fractional gain on the day, but it's only up about a point right now as these numbers settle. That's basically just call it unchanged on the day. The NASDAQ Composite up about 0.2% here on the day, and the Russell 2000 closing out in the red, down 0.3%.
Yeah, and we talked about it kind of, at least on the major market averages, not much going on. If you dig a little bit deeper, the S&P, you've got about 289 names to the downside, 222 higher. Same thing with the NASDAQ Scarlet. It's almost an even split in terms of what names gained and what names declined in today's trade.
That's true. Although having said that, when you look at the sector performances, the gainers have gained a lot more than the decliners have fallen. So you guys mentioned the streaming companies. They are certainly leading the way for media entertainment companies, up by 1.4%. All 5 members of the Auto and Components Index are also higher. That's good for a 1% collective gain. On the downside, REITs are under pressure, as are software and services. Microsoft, a big decliner, and capital goods companies, too, off by 0.4%.
All right, so that's a look at your major industry groups. Let's drill a little bit deeper and take a look at some of the individual gainers. American Airlines, among them, up about 3.6%, off its highs of 5.7% earlier in today's session. JP Morgan raising its rating on the stock to overweight from neutral, saying the company and peers Delta and United have wrestled the high ground from discounters. So definitely a standout performer in today's session. Six Flags Entertainment soaring up almost 19% in today's session. First quarter results beat expectations. Analysts saying attendance was better than expected despite some severe weather in some key locations. And that total guest spending per capita was strong. So some strong numbers there. And then Zscaler, check this one out, folks. Pretty much holding on to its gains of the day. Up about 20% here, surging top of the NASDAQ 100. Reported stronger than expected preliminary third quarter results, boosted its revenue, calculated billings, and adjusted operating income projections for the fiscal year. It's a cloud-based security software company, Matt, so some outperformance.
It's just, there's some of these companies where we know the name, but who has any idea what they do? Zscaler is a name I hear all the time.
It's almost $16 billion market cap.
I know it's a big company. I'm looking at Tyson Foods. We've been talking about the problems that they've been having all day long because the shares have dropped by so much, right? The biggest decline that we've seen since the financial crisis, as they see a challenging market ahead for all of their major markets, which are beef, pork, and chicken, 3 of my favorite markets. I'm also looking at KKR. We talk about the slowdown in M&A and the effect that it has on the big banks. Well, it has a big effect on the private equity companies themselves as well, right? KKR's earnings were down 26%. And as a result, the stock is off. And then Tupperware Brands has had so many problems, legal and reporting problems, financial issues.
Was a pandemic darling.
It was a pandemic darling, understandably so. And we have 2 whole cupboards of their products at our house. But if they fall any further, we can pool together our certs and buy the company ourselves. It's only worth like $30 million in total now.
Yeah, all right, let's take a quick check at the yield market right now. We did talk about what had been an interesting sell-off to start the day. That accelerated later in the day, actually pushing yields on the 2-year yield back up to that 4% level. And you see pretty much across the curve, we are elevated here as the repricing continues. Some of that, of course, is based on economic conditions. Some of that was actually based on a big spike in yields that we saw a couple of hours ago when the Fed came out with its latest senior loan officers survey. And now another report hitting the wire right now. The financial stability report out of the Fed. Those numbers crossing the wire. Michael McKee standing by right now with what they said in that report. Mike, what did we learn out of this?
Well, it's kind of interesting. There are concerns out there, which is obvious given what's going on in the banking system, but the Fed is not overly worried at this point. The major concerns that they found in the financial system were real estate valuations, very elevated, they say, although there are a lot of reasons to think that these are going to be isolated issues and not going to be something that brings down a lot of banks, even though real estate loans have to be refinanced. Household debt to GDP, they say, is modest at this point, doesn't look like a problem. And while business debt to GDP is elevated, it is slowing. The overall quote from the Fed is that notwithstanding the banking stress in March, high levels of capital and moderate interest rate risk exposures mean that a large majority of banks are resilient to potential strains from higher interest rates. So the banking system doing pretty well. Market participants were asked what their biggest concerns are, and 3 things jump out: inflation, banking sector stress, and U.S.-China tensions. And what's really interesting, you look at that one, you look at commercial real estate, how much they've gone up in the past couple of months. The last report was in November of 2022. The only one that eased a little bit in terms of a concern was Russia's war on Ukraine. But all those things are just about 50%, not major problems on the horizon at the moment.
All right, Michael McKee, our Bloomberg International Economics and Policy correspondent there with the latest readout here of what came out of the Financial Stability Report over at the Fed. We can get back to that discussion in a minute, guys, but just want to hit some earnings real quick. Skyworks earnings just crossing the wire a little while ago. Those shares down about 7% in after hours trading here. We should point out that the revenue that they had for the current quarter actually pretty much came in lines with estimates, but here's your forecast. For fiscal third quarter revenue, going to come in at a range of about $1.05 to $1.09 billion. That's below consensus estimates. EPS for the quarter going to come in at about $1.67. That's below consensus estimates. Big part of the reason, guys, why you're seeing the shares down here in after hours trading.
All right, going to go to Lucid, if I may. First quarter revenue coming out $149.4 million. That's a miss, folks. $197.8 is what the street was expecting. First quarter loss per share, 43 cents. That's about 3 cents better than what the street was expecting. The company coming out and saying liquidity is sufficient to fund the company at least into the second quarter.
We're in the second quarter.
It ended the quarter with about $4.1 billion total liquidity, but looking to make over 10,000 vehicles this year. So that stock down.
Please send money.
Down 4.8%. Yeah, that's not necessarily what you want to hear, right? On
no,
a quarterly
enough
update.
to fund the ongoing operations. For this quarter, they obviously need an injection from
That's a short timeline.
The Saudis.
Yeah, we need a little bit more of a time frame beyond this quarter. And interesting that both chip companies and, of course, auto companies did fairly well on a day like today. When it comes to the earnings season, Romaine, I feel like we've seen companies beat lowered bars, certainly, but they have quite a bit of pricing power, and they're willing to sacrifice unit sales in order to get their sales. So they continue to raise prices because people will pay it.
Well, I think it was interesting. Western Digital also crossing the wire. The shares are down, but I thought it was interesting that their gross margin did actually tick up. And just real quickly, guys, just want to hit Palantir. Those shares up by 12% here in after hours trading. A pretty big beat when it comes to both revenue and adjusted EPS, and the guidance that they're giving, at least the range that they're giving, appears to be well within the range of consensus estimates.
That's an AI play, isn't it?
I just want to make a quick correction, if I may. The headline, Lucid says liquidity is sufficient to fund the company at least into the second quarter. They meant the second quarter of 2024. So that's a little bit better than the second quarter that we're currently in.
That gives you a year, right?
They mean they have a year, which is pretty good. They also said they're going to make 10,000 vehicles, and they only sold 1,400 in the last quarter. So 10,000 would be a pretty big jump.
Can they sell 10,000 vehicles, Matt?
I don't know if they have,
they can
because
make all they want. Are people buy? Those are expensive. I mean, I know, Matt, you're a car aficionado, but when I was looking at the prices of, I mean, they don't have anything below 100, so they're clearly going for that premium market here, and I just wonder if there's enough appetite.
No, you're 100% correct. They only sold 61% of the vehicles they made last quarter, if that tells you something about demand, and they had to cut the price of that vehicle from $160,000 to $133,000. So, yeah, they can sell 10,000 vehicles, but they probably need to cut the price a lot further for a sedan.
Don't they all have to cut their prices in order to move it, ultimately?
These Tesla raised prices on those vehicles. Tesla raised on the Model X and the Model S. So the high-end models are selling great for most companies, not so for Lucid.
You know what's doing really well? AI. Palantir saying it expects to be profitable every quarter this year and described demand for its new artificial intelligence products as, quote, without precedent. So there you have it. And nothing, anybody?
No, that sounds about right. Well. I mean, it'll just reaffirm everyone's willingness to jump in on anything that has AI or ML in the description.
This is a tough crowd, man.
I'm
blaming you coming back, Matt here. Palantir's up 13-14% here in the aftermarket. So,
thank you.
And Devon Energy expanding its stock buyback program by 50% to $3 billion. So another headline crossing. All right, I guess we're going to go. That's a wrap.
See ya.
Our cross-platform coverage. See you later. Radio, TV, YouTube, and Bloomberg Originals. We will see you again, same time, same place tomorrow.